you do this something. Now tell me, if you are expecting a loss in production, so that
Yeah.
means we will produce more units.
Yeah.
So the production that was required before was how many units?
1,800.
1,900 units.
1,000. Yeah, 1,900.
And he expects that the 5% of production is lost due to
Due
damage in
to
production.
damage. Yeah.
So can you tell me how much will be the loss that would be there?
1,900.
Sorry,
We get 1,805.
how? Listen to me. He needs how many units?
He needs.
He needs to produce how many units? 1,900 units.
Yeah.
And he also believes that when
There
he
will
is
be loss.
going to produce, 5% of the production will get lost.
Yeah.
Okay. Now tell me, if he has produced 100 units, if his input is 100 units,
Mm-hmm.
5% of the production will get lost, then he will
Yeah.
get an output of 95.
Mm-hmm.
Yes.
Yeah.
He wants an output of 95, which is equal to 1,900 units.
Yeah.
So how many units he should produce?
We use 1,000. We'll do 1,900 into 5 divided by 95.
Into 100 divided by 95. So he will produce 2,000 units. Look again very carefully what it is happening. You know that you require 1,900 units. Production that is required is 1,900 units.
Mm-hmm.
And you also know if you put an input of 100, you
Mm-hmm.
are going to face a production loss of 5,
Yeah.
giving you final output of 95.
Okay.
Okay? Are you with me?
Yeah.
If your 95 represents 1,900 units,
Mm-hmm.
tell me how many units he should produce, question mark. Okay, so I will cross multiply.
Yeah.
1,900 into 100.
200 divided by 95.
1,900 into 100 divided by 95. So he will produce 2,000 units. He will produce 2,000 units to cover the loss. This is very important. Are you with me?
Yeah.
Now, when you're making the production budget, you will first start with what?
Budgeted sales unit.
Budgeted sales is how much?
1,800.
Then you will minus the opening inventory. What is the opening inventory?
Opening inventory is 100.
You will minus the opening inventory. You will add the closing inventory. What is the closing inventory?
200.
So what will you get as production required?
1,900.
But you will also have to add the loss in the production.
Yeah.
So what is your loss in production?
100.
100. So your production required is 2,000. What will you do? You will find this 2,000 and then you will automatically get the loss in production as 100.
Yeah.
Are you with me?
Yeah.
Let's go to the next one. Can you tell me what is the advantage of preparing a budget?
You can make better decisions. You can manage costs more effectively. Motivates the employees. They're more efficient.
You have to write for 3 marks or 4 marks. So what will you write? What is the advantages of preparing a budget?
Helps makes better decision, can manage costs more efficiently, motivates employees, and yeah.
It is a major part of the overall strategic plan. Budget helps you to make more efficient use of resources. Now, what are the 3 budgets that we already learned?
Sales, production.
How do you make the sales budget?
sales budget units into selling price.
Okay. Then based on the number of units that you're required to sell, you make which budget?
You make production budget.
How do you make the production budget?
Production budget will do budgeted sales.
Hmm.
You'll get that. Then you'll find the production needed.
How will you find the production needed?
You will do units.
Add
Will
the
add closing inventory minus opening inventory.
so you'll add the closing inventory. You'll get the total production needed minus the
Opening inventory.
what will you get?
We'll get production
Okay.
required.
If there is any loss in production, what will you do?
Add.
You will add the loss in the production. After you know how many units you have to produce, what will you go and do?
We'll produce.
After you know that you have to produce this many units, after you know that you have to produce 1000 or 2000 units, what will you do?
We'll produce it.
How will you produce it? You're a manufacturer, right?
Yeah.
After you know that you have to produce these many units, what will you go and do?
Produce it.
So to produce it, you will need something, right?
Yeah, materials.
Is that something that you will need?
Materials.
Materials. So that means after you make the sales budget, you will decide how many units you have to produce.
Yeah.
After you make the production budget, you will make the purchase budget.
Yeah.
Purchase budget will tell you how much raw materials you need to buy. What will purchase budget tell you?
How many raw materials to buy?
How much raw materials you need to buy to achieve your desired production.
Yeah.
Okay. If you are a manufacturer, you will first make the production budget and then you will make the purchase budget. But if you are a trader, will you make a production budget? Telling yes for everything.
I said no.
No, you will directly make which budget?
Purchase budget.
But if you're a trader, you will directly make your purchase budget.
Yeah.
Okay. So there is a difference between a purchase budget and a production budget. Can you tell me what?
Purchase budget will
A manufacturer will prepare his purchase budget from the production budget. But a trader will prepare his purchase budget directly from where?
From traders sales budget.
Sales budget. Again, a manufacturer
will prepare using production budget, but traders will use sales budget.
Will prepare sales budget. How do I prepare the purchase budget? You do UQP. How do you prepare the purchase budget?
UQP.
So units that is required to be produced as per purchase budget, you multiply it with the quantity of material into price.
Yeah.
Okay, how do you prepare purchase budget?
UQP.
What is UQP?
Units produced into quantity of material produced into price.
Again?
Units produced into quantity of material per unit and into price per unit.
Okay, can you give the format of the production budget and tell me what does the production budget show?
Production budget shows how many units are required to produce.
To match the
budget sales.
Again, what does the production budget show?
How many units are required to be produced to match budget sales?
What does the purchase budget show?
Shows how many units to be, how many materials to be purchased to meet production level.
How do you prepare the purchase budget?
Production units plus closing inventory minus opening inventory.
Total production needed minus opening inventory units to be produced. How do you prepare the purchase budget?
Oh, production units plus closing inventory minus opening.
Total purchase needed minus opening material inventory, you will get material that is required to be purchased. Now you
Yeah.
have this question. Okay, your production budget is given to you and you have to prepare your purchase budget. Try it.
Mm-hmm.
Now listen to me. You have your production budget. This production budget is already given to you. Yes? You know that you
Yeah.
have to produce 1000 units,
Mm-hmm.
8000, 1100, 1300, 1500.
Yeah.
You know that your closing inventory is 100, 80, 110, 130, 150.
Yeah.
I've given you a small formula for making the purchase budget. What is the formula to make the purchase budget?
UQP.
UQP. Units into quantity of raw material into price of the raw material.
Yeah.
Okay, fine. What is the raw material that you need?
Raw material we need
You require 3
3
kgs
kg.
of material.
Yeah. Yeah.
Okay, to make 1 unit. And the
Mm-hmm.
price per kg is how much?
2.
2. So what is your production? You purchase 1 month before you produce.
Yeah.
Always remember this. You purchase,
1 month before you produce.
so you are producing in December. So when will you purchase?
November.
Okay. So your purchase budget will be for November, December, January, February, March.
Yeah.
Because your production budget is till April.
Mm-hmm.
Okay. What you're going to produce in December, you will purchase it in
You'll purchase it in November.
a month before. This you
Yeah.
will purchase in December.
Yeah.
This you will purchase in Jan.
January.
This you will purchase in.
Feb.
This you will purchase in March.
March.
So you got the U.
Mm.
Now quantity, material required.
Mm-hmm.
What is the quantity that you need?
Quantity we need 3.
3 kg. What is the units that you have?
We have 1800, 1100, 1300,
So this you
1005.
will multiply with 3
Yeah.
to get your material required.
Yeah.
Did you get this?
Yeah.
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 So your price
Our price is 2.
into 2. So whatever you get, Q, you multiply it with the price.
Mm-hmm.
You will get your purchases.
Yeah.
Hmm. Hmm.
Yeah, understood.
Okay. Done.
Yeah.
So this is how you prepare your purchase budget. You should always be sure that you purchase in the correct month. So purchases is made 1 month before production. Now suppose
Okay.
you have to sell in June.
Yeah. So
When
you'll
will you
take for me.
produce?
May.
When will you purchase?
May.
Think
Oh,
properly.
April.
You
April.
will purchase in April.
Mm.
If you have to sell in August,
Mm.
when will you produce?
July.
When will you purchase?
June.
If you have to sell in November, when will you produce?
October.
When will you purchase?
September.
So you should be very sure about the purchase, that the purchase is made in the correct month. You
Mm-hmm.
will add the closing and minus the opening.
Okay. Yeah.
Now there is this one past paper question which is there. Hello.
Yeah.
You have to prepare the production budget for 4 months from Jan to April.
Mm-hmm.
But before that, I want you to give me 3 benefits, advantages And two disadvantages of operating a budgetary control system.
It is make better decisions.
Sorry?
Can make better decisions. You can manage costs more effectively,
And
and motivates employees. And it's part of a strategic plan.
okay, come on, write along with me. What are the benefits of preparing a purchase? What are the benefits of preparing the budget?
Better.
Operating a budgetary control system.
Yeah.
Compels the management to plan for the future. Advantages of preparing the budgetary control system.
Mhm.
What will I write?
Compels the
Compels
manager
the
to plan for
management
future.
to plan for the future. What else will you write?
Better, better cost management.
Cost management, or it aids
Mm,
coordination.
yeah.
Okay, it aids coordination,
Mm.
promotes responsibility accounting. What is the disadvantages?
Disadvantage. It is time consuming,
Hmm.
and it may since production like unexpected natural
Not
disaster,
all staff may accept the budget.
and it limits innovation.
Very good. It limits innovation. Hmm. Now, what do you have to prepare?
Production budget.
You have to prepare purchase budget.
You said production budget.
Okay, sorry, prepare production budget, my bad. After production budget only you can prepare the purchase budget.
Mm.
So this is what that was given to us over here.
Mm-hmm.
This is sales given to us.
Yeah.
And now I have to prepare the production budget.
Mm-hmm.
How will I prepare?
They
If
get
I am
from
selling in Jan,
yeah.
is there
You
any
start from December.
policy?
Uh, no,
No policy. They
no.
want the production budget from Jan to April only.
Yeah.
So Jan, Feb, March, and April.
April. Yeah.
So what I'm going to sell in February?
You'll put in Jan.
Okay, let me see first what is the question saying. The budgeted sales for the first 5 months are expected to be as follows: Jan, Feb, March, April, and May. The
Mm-hmm.
inventory of finished goods at 1st January 2019 is expected to be 10% of January sales.
Mm.
Monthly closing inventory is to be maintained at the same percentage of the following month's budgeted sales.
Mm-hmm.
And they want the production budget. They have not told me anything about that I will produce 1 month before the sale. Did they tell me anything like that?
No.
No. So I will produce in the month of sales only.
Mm-hmm.
Okay? They didn't give me instructions, so I'm not going to do it myself.
No.
So I am making production budget. How will I start?
Jan 3,500.
Budgeted sales is how much? 3,500.
4,000, 4,750 and 3,750.
Then what will I add?
You'll add opening entry. I mean closing entry.
You add the closing. Closing inventory is maintained at the same percentage of the
Of
following
January's
month
10%.
budgeted sale. That
Mm.
means 10% of the next month's sale.
No, they said 10% for January.
See,
Oh, okay, okay.
closing inventory is to be maintained at
Mm.
same percent.
Yeah, so 350, 400,
1
475
minute, same percentage of the following month. Following month means what month?
in the next month.
Next month budgeted sales.
Mm.
The next month budgeted sales is how much?
400.
4,000. So closing inventory will be 400.
Yeah.
Here it will be,
We can't put more than 450. We can't put, so just
you
put
can't put
450.
more than 450. Here it will be
375.
and here it will be
0.
by
No,
mean
425, 425.
what is your total production needed? Revenue minus what?
Revenue minus closing
Then
entry.
you will minus
I
your
mean,
total
opening entry.
inventory.
Yeah.
Opening inventory is 10% of
Yeah.
the budgeted January sales.
Mm-hmm.
So budgeted January sales is 3,500. So
Yeah.
10%,
Mm.
350. This will be,
400.
this will be,
475.
cannot be more than 450, na?
Oh, yeah.
Hmm?
Yeah.
Then you get your production.
3550. 4050.
Yeah?
Yeah.
You make a purchase budget. How you make the purchase budget?
Mm.
U,
UQP.
Q, P. Jan, Feb, March, April. Come on. Each unit requires 3 kilos of raw material, which is expected to cost 2 per kilo.
Yeah.
Opening inventory of raw material on 1st January
Mm.
is expected to be 200 kilos.
Yeah.
Closing inventory is expected to remain the same for January.
Mm.
It is then expected to increase 10% for February, further 10% for March. After that,
Yeah.
it will remain unchanged.
Mm.
Let's see. First, I will start with the units that are required to produce. What am I required to produce for January?
3550, 4050.
4675 and 3800.
Yeah.
Now, what is the direct material that I need?
Mm. 200 into 2.
Per unit.
Yeah.
I need how many? 3 kgs.
Yeah. So 2 into 3550. Oh, what?
I need 3 kg per unit, right?
How?
Units, each unit produced, each
Okay, okay.
unit produced
Yeah,
requires 3 kilo of raw material.
yeah,
Each unit produced requires 3 kg of raw
yeah.
material. The quantity required to be purchased. How much? Done?
Hmm? Mm, yeah,
Now add the closing inventory of material, okay?
yeah.
What is the closing inventory of raw material?
Um,
Opening inventory of raw
200.
material is expected to be 200 kgs
Yeah,
for 1st Jan,
yeah.
and the closing inventory of raw material is also expected to remain same for
Mm-hmm.
January. This is closing, huh?
Yeah.
It is then expected that the closing inventory will increase by 10%
Hmm.
in February. So in February, the
220.
closing inventory will become 220.
Yeah.
In March, further 10%. So 220
Or
into,
242.
and for April, further 10%.
No, it's normal. Shh. It's a
No,
bit.
further by March, April, nothing. After that, it will remain unchanged.
Yeah,
Yeah,
yeah.
so come on. Quantity that is required to be purchased, add the closing inventory, it becomes how much? 12,370. Add both of
Yeah.
this, it will become 14,047. Add both of this, it will become 11,400. Are you with me?
Yes, ma'am.
Then what will you do?
Then we will minus opening.
Opening inventory per Jan is how much?
200.
Closing of Jan will become opening of February.
Yeah,
Closing of Feb will become opening of March.
yeah,
And closing of March will become opening of April.
yeah,
Are you sure?
yeah.
Closing of Jan becomes opening of the next month. So you subtract the opening inventory.
Mm.
You will get budgeted purchases in kilos.
Mm-hmm.
It becomes how much?
10,0650, 12,170, 13,827, 11158.
Okay.
Mm.
Now you got the units that you required to be purchased. You
So what? I see wrote wrong.
quantity you got now quantity purchase. Now
No,
multiply it with the price.
he wrote budgeted purchases wrong for March and April.
No,
Yeah, you didn't minus them.
I minus
No, you got
14,047. Okay, 14. Okay, I added wrong over here. 14,025 plus 242 is 14,267. And this is 11,642.
Yeah.
Okay, now it's correct.
No.
Mine.
Okay.
What is the price per kg?
Price per kg is price per kg is 2.
So you will get budgeted purchases in dollars.
Mm. $21,300 for January.
Hmm? 21,300,
For January.
40,
Yeah.
28,094, and 22,800.
Mm.
Are you with me?
Yeah.
The last part. The directors, you want to do this later?
Yeah, we'll do tomorrow.
Tomorrow, no, later in the evening.
I won't be free in evening.
Why?
I have to go out.